Can Fed Chairman Jay Powell, is he going to be able to enjoy the rest of this summer into the fall here? How do you view that whole process, that issue?
Yeah, I mean, it's, I think, our view, I think very much like Stephanie's, is that that Fed Chair Powell is going to stay the course. We do not think that it is likely that he either resigns or that President Trump actually fires him for a variety of reasons, most of which is self-defeating for the president. We do not think this would lower interest rates. We think it also make it much harder for him to confirm basically anybody that he wants, particularly a more dovish person. So I think that he, Jay Powell probably will not be resting as much as he would want to in August. But again, I think we agree with Stephanie. That he's not going anywhere. He will stay the course.
Libby, synthesize your work on political economics and the politics of Washington into the world of PIMCO. We're hearing in the zeitgeist a more constructive tone, as we just heard from Ms. Roth of Wolf Research, a more constructive summer, a more constructive Q3. OMG, we're going to survive tariffs. Fold that into the bond market and what yield would do. Does that get us back on a disinflationary vector of low yields? Or do we have stimulus that gives us stable yields or higher yields?
Yeah, we think, we've been saying now for about a year that our view has been that you'll most likely get a steeper curve, whether that is sort of a bear steepening or a bull steepening. You could basically get both, right? Where you have more term premium at the long end of the curve as investors like PIMCO require more yield to invest in longer term paper. But at the same time, you also expect the Fed to likely cut, and that is our view. We do think that you may get more term premium at the end as folks do get increasingly concerned about the deficit situation, about potentially the independence of the Fed. But at the same time, that the economy is decelerating. And, you may see a little bit of stimulus from the tax bill. I'm not sure that's really been sufficiently reported, just in terms of some of the retroactive tax provisions that were retroactive to the beginning of 2025. That means just the bottom line here is that consumers will actually be getting some nice tax refunds in the beginning of next year, but also businesses will be able to take advantage of some of these new business tax provisions starting kind of, in the fall, most likely. So you could see some, marginal fiscal stimulus. We're penciling in about 0.5 point over the next 12 months from the tax bill. With that said, the tariffs are still in place. And we continue to believe, and maybe we're in the minority here, that the president is not, tacoing, if you will, on tariffs. He really believes this. He believes this is an opportunity to really remake the global trading order. And I think it would be sort of foolish, honestly, to not take him seriously that higher tariffs are likely coming. Regardless, though, Tom, this is important, is that the tariff rate is already high. We're assuming that the tariff rate is about 13-14%. And again, will likely go higher, even if you don't see these reciprocal tariffs going on August 1st.
Paul, I can't get my head around that. I'm still,
no.
And frankly, I've heard 13, I've heard 15,
I've heard 20.
Give me seven other numbers.
Yeah, I know.
We are so far from 3.
So far from 3. And the question obviously is how much will corporates take it in their margin versus passing along to consumers. So, Libby, I also want to look a smidge forward here to September when our esteemed Congress returns in September. They got to pass some legislation to keep the government open, don't they?
Yes, as a reminder, in the tax bill, which I think we all welcomed in the bond market, they did address the debt ceiling. So the debt ceiling is usually that is a, because of a big, crisis, or at least momentarily a crisis for the bond market. We're not going to see that. The debt ceiling has now been increased, likely to beyond 2028, if not even further, or 2027, if not further. But we do still need Congress to fund the government to avert a shutdown. The deadline is September 30th. They haven't made a lot of progress. We could see a government shutdown. I'm not sure if it's a real market event, but clearly if the market is already feeling if they're already on edge, or if they will be on edge in September, this could sort of exacerbate that.
I got a note here, not a hate. I do get the hate mail. Michael Barr gets all the love notes, but Libby Cantrill, is the basic tone of the American zeitgeist that we're prospering in a prosperous America, and that with all this legislation, all of the administration's work, all of our work, we're leaving behind a huge part of America? Is that the backstory of this 2025?
I'm not exactly sure what you mean by
No,
that.
but we're leaving behind. I'm getting notes from people saying all your fancy people, all your fancy guests are talking about an America that's employed, prosperous, in the stock market, whatever, in the bond market with PIMCO funds. The fact is we're leaving a whole hunk of America behind, right?
Yeah, no, I think that's absolutely right. And I mean, this is part of the reason why I think the majority of Americans elected President Trump is that they did feel like the sort of the establishment, that the elites, the Bloomberg elites, if you will, Tom, we're leaving the kind of the working, person behind. I'm not sure if those folks feel like the Trump administration, at least yet, have addressed some of those concerns, particularly around cost of living. I mean, these are all, kitchen table issues. These are still are the most important for voters. And I'm not, that doesn't seem to have gone away. If you just look, at least at the polling, take that with a grain of salt.
Nicely put, Libby. Thank you so much. Libby Cantrill with PIMCO.